Good afternoon, everyone, and welcome to Stock Market Today for Wednesday, February 14th. My name is Ken Shreve, joined today by our news editor, Ed Carson. Well, after a sharp decline for the market on Tuesday, the stock market bulls got a nice close and solid gains for the major stock indexes. Nice rebound for small caps. But before we get into all this market discussion, let me throw it back over to Ed, who's got three stocks to watch for today.
Yeah, I want to take a look at Netflix, Birkenstock, and Celsius.
Okay, excellent. Why don't we start with the Nasdaq, which actually had a pretty nice day. Looks like it's up 1.3% at the close. And Ed, as we talked about on IBD Live this morning, there were some constructive things about the Nasdaq's pullback yesterday.
Yeah, I mean, it came down, and honestly, we sort of needed a pullback, you could argue, because we were sort of getting extended. Came back, and yet we bounced off the lows. There was a real nice end of the session close, so we didn't even get to the 21-day line. So it was nice to see the market rebound today. It suggests that maybe yesterday's action was just a one-off sell-off. If nothing else, it certainly suggests that we're not going to go straight down in some kind of vertical violation type of situation that would be really scary. I think the only negative is that we were maybe almost too positive. It wouldn't take much for the Nasdaq to get extended again. And it's something you brought up today on IBD Live is that bullish sentiment is getting pretty high. Maybe it's not excessive, but it's close to being excessive. Let's put it that way. And that those both are indicators, little yellow flags, things that say, well, maybe we'd be ready for a pullback. So that's just something to note, but nice action today.
Yeah, definitely seen plenty of yellow flags out there in the stock market. Certainly since the big gains for the stock market since early November when we got those initial follow-through days for the Nasdaq and the S&P 500. A lot of stocks have just gone off to the races, many up near highs, not giving back gains, but it has resulted in a lot of extended stocks well past proper buy points. So, all right, why don't we shift over to the S&P 500, which didn't perform quite as well as the Nasdaq, but still a solid 1% gain. And, for the S&P 500 yesterday, closed up near its session high, came close to a test of the, 21-day moving average, and it, made a nice move today.
Yeah, and it actually closed just above 5,000. We're just a couple minutes behind on this, but it did nudge above that level, so it looks very strong.
Yeah, well, we should note that volume was heavy in the stock market Tuesday, so the Nasdaq and the S&P 500 marked distribution days or higher volume declines, and then the gains today on the Nasdaq and the NYSE did come in lower volume. So maybe not a whole lot of conviction behind the buying today, but we'll take it. And let's move to the Dow Jones Industrial Average. Industrials have been performing pretty well in this market. The Dow lagged today, up 0.4%, but still holding up near highs. And why don't we take a look at small caps too, Ed? We can look at this is the IWM. We had three explosive gains, and then the big drop yesterday. Well, we had that big spike in the 10-year Treasury yield, but a nice bounce back for small caps today.
Yeah, so I mean, we finally got over 2,000 on the S&P and on the Russell 2000, the 200 level basically on this ETF. Nice to see it find support at the 50-day line, bounce back over the 21-day. On a weekly chart, I mean, it's actually flat. We've actually, a lot of the things that there are some moves around. It would be nice to see that really decisively move, because as definitely something that you brought up and a lot of others brought up, the breadth was extremely negative on Tuesday, about as extreme as, and far more extreme than you'd think given the indexes. Yeah, it was a bad day on the indexes, but it felt more like, in terms of the breadth, more like, boy, there wasn't that a 5% down day, 6% down day.
It really did, yeah.
So, yeah.
It really did. On the NYSE, I mean, breadth yesterday was as bad as 14-1 negative. It ended up being about 11-1 negative, and not quite as bad on the Nasdaq. But it was pretty bad breadth yesterday. I will say today, breadth improved, which will take Nasdaq a little about 3-1 positive, and maybe a little better than 4-1 positive on the NYSE. All right. Well, we also have a couple of ETFs we wanted to look at. Obviously, the market is still, focused on this 10-year Treasury yield. Yields backed off a little bit today after spiking yesterday on that surprise reading on the consumer price index. Now, is it tomorrow, Ed? I think we've got producer prices on Thursday.
No, I think we have retail sales
Oh,
and
retail
jobless claims
sales
tomorrow, and then we do have the producer price index on Friday. So
on
still
Friday.
plenty going on. That could be out there. It does seem like there's been a change, and I think the market maybe we won't get so radical. The market seems to finally be close to in line with what the Fed has been saying on rate cuts. So sort of reining in the Wall Street a little bit.
Yeah, yeah. And why don't we take a look at that equal weighted S&P 500 ETF RSP, which, came down. It was pretty violent sell off yesterday. Came down to its 50-day moving average, found support, and rallied right along with the S&P 500 today.
Yeah, so while the breadth was weak yesterday, and it definitely was, this wasn't too bad, and it's come back, and just a couple days ago it was at 2-year highs. So this has been acting pretty well, a lot better than the small caps did.
All
So
right.
yeah,
Why don't we shift over and talk about some individual stocks? Again, it's a tricky market now because indexes have been running since early November. A lot of stocks have been acting well, but finding stocks that are still actionable is getting tougher because of just all the extended stocks out there. But why don't we start and take a look at Netflix, which actually made a pretty bullish move today. Volume picked up quite a bit from Tuesday. Didn't see any news, but this was a really nice technical move for Netflix. Ed.
yeah, I've been consolidating pretty nicely. It's light volume for a couple of weeks after this huge earnings move. It just feels like the ad tier is doing well. They're gaining subscribers. Rivals are losing subscribers. It's been a pretty positive situation. This today seems like an add-on buy point. If you were really aggressive, you could have taken a new position. I will say that if you're going to be, especially in this market with some yellow flags and other situations, is that if you're going to be aggressive going in, you have to be just as quick going out. You can't just go in there and plant a flag and say, I'm not leaving. You need to have your exit strategy. Maybe, look at Tuesday's low or the 21-day low, which honestly was going to catch up to Tuesday's low pretty quickly. So just remember that, this is definitely for more aggressive traders. This was added to swing trader today, and that's more of that short-term move, but definitely a nice move, and the volume definitely picked up today.
So, what's interesting about Netflix is that, it was a fast growing company at one point, and then growth started to slow. But I would argue that Netflix is actually has the N in Can Slim right now, kind of adapting to new conditions in its industry. It's a very crowded space, but you mentioned this ad supported subscription tier, which appears to be doing well. And they've been, cracking down on password sharing, which has, helped boost revenue as well. So, Netflix.
Yeah, and I was going to add one more thing is that they're probably cutting costs because the whole peak TV seems to have ended, and it seems like they're going to slash many productions they do, but that's okay because everybody else has gone back to selling them content for cheap, and then
Yeah.
Netflix turns things that didn't get any but viewers into huge hits again. So it works out for everybody. So there's going to be a cost savings too. So you get that higher revenue revving up and costs maybe under control. And boy, yeah, that does seem like a big shift.
Yeah, and you see that growth playing out in the annual earnings estimates here. They've been recently revised upward, but you got pretty decent growth expected for 2024 and 2025. All right, let's shift to a recent new issue and talk about Birkenstock, which tends to trade in volatile fashion, but there does appear to be. I mean, this is a well-known brand, obviously a recent IPO, but there does appear to be some growth story here. So investors might want to, pay attention to this stock and see if it can, finish building this current base.
Yeah, it is. Again, it's going to be very volatile. So that makes it a little tricky. It's interesting, and this sometimes happens with new IPOs, is that it's sort of delayed. This was for the September quarter. We're going to be just a couple more weeks. We're already going to get another earnings report. This is for
Yeah.
December, and eventually it catches up. So not a lot of time. It's sort of a nice base here. Comment setting up relatively well, and sometimes you need to look on a weekly. It doesn't look as bad here. I mean, there are a couple of wild weeks, but actually not so wild. It's only 17% deep. You definitely can see some more volatile action. It's possible that Monday's high will end up being a handle. So that's something to be looking for. And this group is doing pretty well. Obviously, there's Deckers, but that's doing well. But a couple other names, Crocs will report tomorrow morning. That sort of has a bottoming base that it's close to,
Mhm.
and so does on holding, which oh boy, came right up and actually topped what you could consider a bottoming base. Or some such in right there within this larger consolidation. So definitely a hot group. It's something to note with Birkenstock. It's nice to be a solid company and in a strong group.
Yeah,
Uh,
still in the early stages of a move. Doesn't have much history as a publicly traded company. If you go back to the weekly chart, clearly an early stage base forming here. So we're in a confirmed uptrend, and that typically is a good environment for setups like this to succeed. We'll just see how the market works through this economic data on Thursday and Friday, but certainly a nice close for the market today. All right, let's end by taking a look at Celsius, a former leader that is making a case that, hey, it may have more left here. So looks like it kind of broke out of a downtrend today.
Broke out of a downtrend. It cleared at least this short-term high. It came close. It tried to clear this short-term level, so you could use that as an entry. I'd say, and I'll just disclose, I have a position in this. One thing to watch out for, I would think, or something to keep in mind is it's already a fair amount extended over the 50-day line. That's been something tricky with Celsius at times. When it finally flashes what seems like a buy signal, it's extended from other areas. So that's something for investors to note. I think it would have been nice if it could have paused for a little while longer, but stocks don't always do what you want, and right now leading stocks aren't going to wait or when the market is rally mode.
Yeah, so Celsius is interesting. When it went up close to that high of 70 and started to pull back, it came down in some heavy volume. So now Celsius is kind of running up into that overhead supply from what it initially sold off. So we'll see if
Hmm.
volume continues to stay strong here. It might be enough to work through this overhead supply, but it's a good setup. Taking shape here and a nice breakout from a downtrend today with some volume. All right, Ed. Well, we know it's kind of it's a tricky market right now because we're in a confirmed uptrend, but boy, it's a difficult finding actionable stocks. We looked at at Celsius, so they're out there, but few and far between, which makes it challenging right now.
Yeah, and I think just you don't have to be necessarily doing a whole lot. I mean, if you can nibble on some things, you could have taken some profits or cut some losses, earlier like on Tuesday. But if you're still just generally having pretty decent exposure and just sort of riding the trend, you don't have to be super busy every day. And pick your spots. Hopefully, you're in a position where you don't want to be chasing. You don't want to be in that situation. So you can take some actions, but I think generally riding the trend makes a lot of sense right now.
Yeah, no doubt. And again, even though we saw some pretty harsh selling in the stock market on Tuesday, the action in individual stocks, whether it was Nvidia or Alpha Beauty or ServiceNow, there were just so many stocks that really acted well yesterday. Kind of fought off lows and climbed off lows, and then again we got a good close. We were talking this morning about, well, maybe we're going to open strong and then fade into the close, but we did the exact opposite today. So I think that should make the bulls feel pretty good. We'll see what tomorrow brings. Ed, thanks so much for your insight as always, and that'll do it for today. I believe Ali's going to be back in the chair tomorrow. We'll see how that plays out. But until then, if you haven't checked out IBD Live, our stock market show that starts at 6:30 a.m. Pacific time, a little bit before 6:30, goes for about an hour and a half each day. Investors.com/IBD Live. You can check it out. We'd love to have you join us. And until then, we'll see you back here after the close tomorrow for another Stock Market Today video. Thanks, folks.